Hey guys, it's Jenny Silver, and today I want to explain to you the different types of taxes that you're going to experience and need to plan for as a small business owner in the state of California. The first type of tax is your business tax certificate. Now, this is also known as a business license. However, the purpose of this business license, which is actually called a business tax certificate, is to pay taxes to your city. This is an annual tax registration which differs from city to city. It can range anywhere from $50 up to $200 approximately, depending on which city you are in. Your business tax certificate is going to be renewed annually with your city. The next type of tax is sales tax. If you're a business that is selling tangible products, or you are selling labor that is then utilized to create a tangible product that is sold to a customer, then you're going to be required to collect and remit sales tax to the CDTFA. In order to do this, you're going to need to obtain a seller's permit from the CDTFA. You're going to collect the sales tax from your customers or clients, and then you're going to be required to submit that sales tax payment to the CDTFA on a regularly scheduled reporting basis that will be assigned to you from the CDTFA. In most cases, either annually or quarterly, depending on your amount of sales. I have several full videos that walk you through the process of not only applying for a seller's permit, but answering several frequently asked questions surrounding the process and requirements. If you have more questions about seller's permits, make sure that you click the link in the video description down below. The next type of tax you're going to be required to pay is going to be income taxes. You are going to have taxable income that you are earning, and you're going to be required to report that on your tax return each year. Now, if you have a net income in the amount of $400 or more in self-employed income, you're required to file that income on your tax return. Self-employed income is reported on Form Schedule C of your tax return, where you will note your income as well as your deductions. Now, additionally, because this is self-employed income, you are not only going to be required to pay those federal and state income taxes, but you're also going to have to pay what is called self-employment tax. Self-employment tax amounts to 15.3%. So why do you have to pay self-employed taxes? Well, as someone who is self-employed, you do not have an employer. Now, an employer would withhold Social Security and Medicare taxes. However, because you are self-employed, you must do that yourself. Self-employed income taxes are going to be done on your tax return that you file in April. Lastly, with income taxes, some self-employed individuals are going to be required to pay estimated quarterly tax payments in advance of the year that those payments are actually due. If you expect to owe a tax bill of $1,000 or more when your return is to be filed, then the IRS requires you to estimate the amount of tax that you are going to have to pay and to pay it out in advance. Now, if you're self-employed and you did not owe any income taxes, then this does not apply to you. However, this does begin the first year that you have a tax bill. Once you have a tax bill and owe that self-employed income tax, if you anticipate that you will have to pay $1,000 or more in the next year, then estimated income taxes apply to you. The last type of tax that most small businesses are going to undergo is going to be unsecured property taxes. Now, this one may come as a surprise to many new, small, and specifically home business owners. In general, unsecured property tax is typically for business personal property, such as office equipment, whether it be owned or leased. Property tax rate for year 2021 was 1.1801%. Business property owners are required to file a property statement each year with the Office of the Assessor Recorder. This form is going to be mailed to your business address, and it can come as a surprise if you're not expecting it. My first year in business, I made a big mistake. I threw this form away. I didn't realize that it was tax that I had to pay, and I received a very large tax bill. What happens if you don't pay this? Well, if you do not pay your unsecured property tax form and you don't submit to them the information that they need in order to calculate it, the assessor estimates your property. What's wrong with that? This assessor has no idea what type of unsecured business property you have. They don't know how much office equipment or business equipment you have, and in most cases, they highly overestimate it. Lastly, if you're an LLC, then you're going to be required to pay an annual $800 California State LLC tax. This annual tax is going to be due even if you are not actively conducting business or turning a profit. You have until the 15th day of the 4th month from the date that you file with the Secretary of State in order to pay this for the first time, and then it is Okay, you guys, I hope that was helpful. I have videos on each specific topic that I talked about here in much more detail linked in the video description down below. So if you have questions about a seller's permit, about sales tax, about self-employment taxes, etc., make sure that you